Hi, I'm Kiran Patankar. I'm President and CEO of Maple Gold Mines. Maple is an advanced exploration and development company focused on district-scale gold projects in Quebec. We have a 3 million ounce resource on our Douay project. We also have a past-producing mine complex at Jutel, and lots of upside to both grow the ounces and also define higher quality ounces as we move forward. So delighted to be here again with you, Matthew, and it's a beautiful day in Vancouver.
Good to have you here, and I'm glad it's a beautiful day over there. We've got something similar over here. Right, you put out some pretty stellar news last week. You had a really strong reaction in the share price. People are listening. So for those who don't know, what have you been telling us?
Yeah, well, actually, it was last week. There certainly was some movement in the share price in the positive direction that continues this week. The news actually came out. It was 2 Thursdays ago. And so what we released were the first 5 holes of our ongoing 10,000 meter drill program at Douay. That's a fully funded program designed to really, show what the potential of the Douay deposit is. It's the first meaningful drilling that has been done on the property in over 2 years. And I think the reaction in the market is appropriate given the result that we put out and the results that we put out. Particularly want to highlight that our hole that was drilled in the Nika zone, which was a design 300 meter step out from previously the best intercept that had been drilled at the Nika zone. It encountered spectacular intercept, over 200 grams, 240 gram meter, very thick, very continuous. And, when you're looking at 100 plus meters of 2 gram material, including 56 meters of 3 gram material, and 17 meters of 5 gram material on one of your very first planned drill holes under the new team, new management team, new technical team. This is the kind of response that you get. Certainly it helps that we've got tailwinds in the gold market, but we're just getting started.
Right. Okay. Look, given you spent most of the first few months of your kind of CEO tenure solving and restructuring some of the problems that you felt the company had, getting after the drilling must be, I guess, a relief. And getting this kind of success must be a relief. But tell us about the process. I mean, how did you identify and target and model out that kind of drill program?
Yeah, relief is one word. I would say it's validation of the business model, the articulated vision that I put out when I joined and became CEO in August of 2023. I know for shareholders, certainly for myself as a shareholder, 2024 was difficult, right? It was difficult across the sector, but particularly for Maple, we were doing the hard work to rethink the project, restructure our joint venture, rebuild the relationship that we have with, one of the best performing gold miners, out there, right, in Agnico Eagle. And setting the company up financially to be able to go out and execute these kinds of programs. What's really important and what is less a relief, more of a validation of the process is, we've changed our corporate culture. We've instilled exploration and site management and corporate management best practices. These aren't things that happen overnight, right? These are things that take time to build. It takes determination, the number of calls that come in and saying, how come you're not putting out drilling results? And those are the only things that move the share price. Well, a CEO's job, in my view, is simple. We're here to build lasting value for shareholders, not just to manage the share price. It is certainly rewarding when the work that you put in is reflected in a drill result, for example. But we would also say that this is not just a drill hole play. This is a long-term view on a fundamental asset in a rising gold price environment. And we've seen the gold price has gone up, 20% just this year. It's a record performance, but yet, the small caps like ourselves, it's not being fully priced in. And so for us, what's really exciting, and again, it's a testament to the team across the board from top to bottom, our guys working on the ground are doing great work. The targeting that we came up with, and that's the other thing, Matthew, we didn't just drill slam dunk layup holes. You wouldn't fault us for just going out and drilling the easy stuff. I mean, this hole at Nika, 300 meter down plunge step out, people look at the drill collar and they say, oh, that's just within the pit area. But when you look at it in 3 dimensions and you look at the open space that's there between the 282X intercept, which was, 132 meters of 1.6, You look at the favorable host rocks, you look at the targeting that we had and the intercept, and you start sketching in, what kind of volumes you have and at what potential average grades are there. I mean, this is a significant hole.
Right, but how do you get after this, right? You're in this obviously mineralized system at depth, but you got to kind of come back to the market and say, look, we're going to chase this thing, trying to understand the scale opportunity, the grade opportunity. There's some really super high numbers there. I mean, so what does that process look like for you?
Well, I think it's straightforward. I love the question too, because I gave this analog to somebody yesterday, and that, and again, I'm a geologist and an engineer too. So this is not, just a capital markets, gold price, momentum type of, this is there are real ounces here in a jurisdiction that is of interest where there's infrastructure, et cetera. So success to us always has looked like showing the path to get from 3 million to 5 million ounces thereabouts, while also de-risking and while also showing that there are high quality ounces that could potentially form part of a viable mine plan. And doing it with 100% ownership of the project obviously is helpful, because, the things that move the needle for us as a 100% owner, at our 35, 40 million market cap, are things that will actually drive share price appreciation. And so when we designed the program, when we designed the targets, we have a model. We have a geologic model. It's in our presentation deck, actually. Anybody that's out there should look at I urge you to go and take a look, because there's some updated information and a little bit more of a description. I think people didn't really care when we were just talking about methodology. Of course, they see the results and they focus on the results, but it's good process that's led to the results, right? It's not a fluke. And what we've done is we've got a Venn diagram. It's very cartoonish. It's very simple, but for lay people, we've lined up things like we have this regional structure in the Casa Berardi, which is a known gold bearing, principal structure, deep mantle tapping in the Abitibi, known to host gold mineralization. We looked at the Douay intrusive complex, which is also in place along that major structure. We've got an alteration signature. We've got disseminated pyrite. And we put out, by the way, in this intercept, we put out the detailed assay results on a meter by meter basis. So you can see when, companies, for example, some of the ones that are, to the east, Newfoundland, for example, I mean, we wish them well, but, when you have a nuggety deposit, it's challenging. In this case, these were very continuously mineralized, very consistent. This is the kind of thing that you look for in terms of a mining scenario, potential bulk underground. It's about 500 meters depth, but if you look at similar underground projects in the Abitibi, including those held by our largest shareholder and partner Agnico, this intercept stands up, and this zone potentially stands up as something that could be very significant. So again, when I talked about that model, what we do is we look for the interlocking circles, and where those circles intersect. If we see room and space for it to grow, that's a drill target.
Right. So those are two phrases which don't usually kind of get jammed together, right? You got high grade, you got bulk tonnage underground. How does that sort of description influence your approach to kind of resource expansion?
Yeah, well, we have a 6 kilometer by 2 kilometer, pit constrained resource, right? Which basically straddles the Casa Berardi. It's 55 kilometers to strike length that we control, and it's sitting in the top 350 to 400 meters, right? So everybody looks at open pit, right? We have a pit constrained resource that's close to the surface, so naturally it's got to be open pit. Well, not necessarily, right? Because it's a function of, the grade. It's a function of, we have some overburden, because it's glaciated terrain. And I really believe, Matthew, if this was just bedrock sitting at surface, this would already be a mine, right? So there's some things about this, market opportunities, asymmetries, et cetera. Sometimes nature gives you a gift, right? And I think here nature's given us a gift in that this has been sort of buried. Certainly people know that there's a significant gold endowment there, but when we drill something like this, obviously we're looking for areas that we could expand, resource like Nika. Nika, in the current 3 million ounces that we have defined in our 2022 resource update, the Nika zone, you should look at it, it's less than 100,000 ounces, right? So it's a very small component right now of the overall resource. But if you start doing some volume, back of the envelope, et cetera, this whole sketching in it becomes something significant. That to us is return on investment. And then the difference between, call it high grade, in this case, something that's, 3 grams over 56 meters is a great intercept if it's in the top, 1,000 or 1,500 meters, right? Much less the top sort of 500 meters. And when you think about what the right way to do that is, remember, it sits right next to our Douay West zone. Douay West has a head frame sitting on top of it, which means somebody had planned to mine that. It was Orizon back in 1997. They drilled an exploration shaft down to bedrock at 30 meters. So I think they originally planned to do Douay West as an underground. With higher gold prices, maybe the open pit scenarios obviously work. But if you think about the position of Nika and you start sketching in, what would be the nucleus of a potentially significant starter operation with lots of room to grow, that's what we're looking at, right? And that's what's exciting. And again, this is just one area within the deposit that we targeted for a potential extension of the existing resource. Anything we do, Matthew, that goes to depth, where there may be some overburden thickness on top, or we define the geometry of the ore body, would lend us to be creative in terms of thinking about trade-offs between open pit, bulk tonnage, underground, and typical underground grades. If you look at our resource currently, that underground resource that we have is a very small component of 3 million ounces, but the grades are quite low relative to underground. It's because they weren't domained as underground, right? They were just blocks that fell outside of the pit bottom, the pit constraint. So that's also what we're gearing up for as we get to the end of this year, having done all this drilling, defined some new zones, is really putting out a robust, updated resource that leads to scoping studies, PEAs, et cetera. And that's really how we think about it. That trade-off between open pit and underground could be one or either or a combination, right? Just whatever makes the most sense economically.
Okay, I want to come back to something you said earlier, which is with regards to kind of 300-meter down plunge step out, right? Because the question I kind of want to think about, and I would like to understand your thinking on this one, is around the kind of confidence levels and the predictability of the mineralization controls at Douay, because it's and what sort of alteration styles are you seeing? Because that says to me, if you've got a good sense of what's going on there, you're going to find cheaper ounces. You're going to be able to get after these new ounces and not, blow the budget. So again, can you talk to some of those things?
Absolutely. I think alteration is one thing that is, we're seeing. We had a thesis after going back and doing that 30,000 meter core relogging, rebuilding the geologic model, looking at all the multi-element geochem, ICP data. We have this big intrusive body. It's brought a lot of hydrothermal fluids, mineralizing fluids up with it. That's caused the, country rock that had intruded, the volcanic and sedimentary sequences to become highly altered. And it is within that alteration halo that we're seeing, for example, at Nika, where we're seeing some of this, fantastic grades and thicknesses that can really, add ounces very quickly. So it's a validation not only of the sort of link between alteration and gold mineralization, but we're looking at the geophysical data. Typically, we had targeted magnetic lows. It's an alkaline intrusive body, and so we see the meat of the gold mineralization within the intrusive. And so you're thinking from a plan view, looking down, top down, you're going to target mag lows. Well, we see some, we're starting to see some association, especially in this hole 338. We saw the magnetic susceptibility was off the charts. It was a mag high. So it makes us think, okay, well, in some areas, as we go to depth, some of this gold mineralization that's associated with, fine grain pyrite, 5 to 10%, that has some magnetic signature. It's also located in a zone that we had identified that, there is some structural influence kind of going on throughout the Douay system. We put that structural interpretation out there. That's also in our updated, this geologic maps and everything that you see. Everything you see on our website, on our corporate deck, this is all the product of good systematic exploration work that's been done by the team. Now, what do you do with it, right? Because that's the other knock on this company in the past was, sure, when you have a big endowment, a big system, you tick all the boxes from a recipe standpoint for finding gold, you go and drill holes, you're probably going to find gold. As one of our directors likes to say, you can be a terrible fisherman, and if you're fishing in the right lake, sometimes you get lucky, right? So in this case, what we're trying to do is to introduce a bit more of a predictability. I mean, exploration is always risky, but this is just the way we manage the business. It is managing risk, right? And so, when we have a beat up session, the way we did our targeting, our new team came up with its own targets based on hard look at the rocks, the data, the models, et cetera. We have a great group working with us. It's great for cost, but it's also great because they're, local Quebecois geologists, contract geology services. They have a lot of continuity with the project. they came up with their own targets. And then we actually did a beat up session to think, do all these circles, do they overlap? Does it make sense? Are these, and then we decided which ones were the highest priorities. And then that's why you're seeing the kind of, program results come out with the first batch. Again, we are very fortunate. We feel very good about, the result that came out. But again, when you really look at, we had the core, I was out at site last week with our team. When you put the core for the DO 282X hole up on the table, which is where it is now, and you look at the 338 hole that we just announced, and you put those side by side, you see that this is not just, completely different looking rocks, fluky style, moonshot type drilling. Remember, the company had done some of these deep drill holes, things like that. This is in the same host rocks. It's in a syenite, mixed syenite and basalt unit that's been highly altered. The rocks look almost black with alteration. They've got lots of fine grain, 5 to 10% pyrite, as I said. We had seen before PDAC, we had seen that on the table, the bottom 60 meters on the table. And we had a feeling this was going to run because it did look like some good mineralization that we had seen in other portions of the Douay deposit, particularly the porphyry zone. But, what do we do going forward is we take that and we say, okay, does the orientation, our team just put together a presentation yesterday that talks about, the alignment of not just structures on a micro scale in the core, but do those structures, and we're doing oriented core throughout the deposit. All this drilling that we're doing right now, it's designed to try to validate the structural interpretations, et cetera. But we can sort of say, where we drilled, the orientation that we drilled from the 282, does it line up in a macro sense with some of the things we're seeing in a micro sense, right? I mean, is there a reason, is there explanation for it geologically? And then can we take that and can we go back, and even if we permitted, we're working with our local First Nations partners really well. We've got our ATI permits, new process in Quebec, lots of consultation work. I had a great meeting with the First Nations community a couple of weeks ago, and we have, some people working with us. And so there are holes that are permitted, they're ready to go. It's always a question that you have to ask yourself, are those the right holes to drill in the sequence based on what we just learned, right? Because drilling is a little bit like, the random walk theory or sort of the Monte Carlo analysis, going back to business school, economics is you drill a hole, you gain information. You can't just put the blinders on and just keep drilling the rest of your holes. So now we have 2 rigs drilling and following up on the Nika zone success. And those are the next results we're looking forward to, and the market should be looking forward to.
Yeah, I think it's interesting, actually. I think you've been rewarded on what you've done, not what's happening in the market with gold price. I think broadly, exploration companies are not being rewarded just because gold's hit, 3,300. You've actually got to stand here and 2 feet and do this, which kind of makes me sort of lean in a little bit to how you're going about it. The data's obviously coming back quickly. You're having your targeting systematic targeting, what are beat up sessions? I like that phrase. But how are those kind of beat up sessions informing the way that you go about it? You talked in the past about like shallow targets before kind of getting after the deep stuff. But when you look at, and you've also said to me, this is, 70% is going to be focused on resource expansion or conversion, and 30% on new targets. Do those kind of beat up sessions sort of change the focus? Do they sort of do those beat up sessions involve looking at the market and say, oh, maybe we need to drill for the market and not stick with our plan? What are those conversations like?
Well, they're very good, robust. There's a lot of smart people in that room, people that have probably forgotten more about geology than I currently know. And I'm not taking anything away from myself. I got a heck of an education, not only in the markets and working in industry, but at School of Mines. So it's nice to be back and thinking about, real geology fundamentals, and, adding value to the drill bit. When we think about, I'll talk about your last point, I think it's a really good one, is you do see a lot of junior companies that do drill for the market, right? They do sort of go after the things that, as they say, if it were easy, everybody'd be doing it. Coming by capital over the last couple of years has been very difficult. You can get with the right sort of promotion, the right machines behind things, you can get, pretty frothy valuations off of, results that don't necessarily move the needle, let's say, for, major companies, producers, fundamental groups that are really focused on not just the fundamentals of the market, but also, does this deposit have the potential to be world class? Does it have potential to be a long life, you know, generator of free cash flow and return on investment and all those other metrics that you look at, all those financial numbers, even the share prices, for example. There's a lot of behavioral elements to that, right? And I came out of Yale on my MBA, and that was a big behavioral economics program. You could go into the lab and see how capuchin monkeys behave when they're given some coins and they're shown food or other things, right? So what this is it's more understanding geology. It's more thinking about not just what moves the needle. Certainly, we have an audience of retail investors. We have an audience of institutional investors that are probably a little bit more fundamental, long-term, stable investments that generate alpha and risk-adjusted returns over time. And then you have groups like Agnico, right? And I remember very carefully, during the time that I've been at Maple, which again, I've been CEO since 2023, late 2023, but I was corporate development here. I was CFO here. I had a long relationship with Agnico even before I came into the company. And so I do understand, why, even though some of the results that we had in 2021, at a much lower gold price environment, we had a market cap that was 150 million, right? And you were seeing holes that were coming out, including this 282X, which, as I said, was the previous best hole at Nika. We just drilled the best intercept at Nika and a better hole, and we're still a $40 million company, although the gold price has gone from $1,800 to $3,000. So explain that one to me, and I'll give you a candy bar, right? Because to me, I look at it and say, maybe if we had started with a, clean company, out of the chute, we put out a first maiden resource, 3 million ounces, Agnico got invested, they put 12 million in. I mean, some of this thing you can sort of beat yourself up. It's not really useful. But you can think about, how would if I had started with Agnico's $12 million that they put into the ground over the first 2 or 3 years of the JV, or that $4.8 million that went into the deep drill program, knowing what I know today, if I had taken that money and I could put it towards our project, what kind of value could we have created? I mean, it's an interesting thought exercise, but practically speaking, we're not looking backwards, right? We are looking forward. So when we have those, and as I called it, a beat up session, that comes out of investment banking, right? When we would do presentations, in house, and everybody on the sales desk would, throw popcorn at you and try to distract you because you're trying to stay focused in a market that wants you to be distracted, that wants to take you and put you off guard. And what I like about this is when we have consensus. I mean, there's going to be differing opinions in that room as to what targets we should drill when, or who likes which target, or who likes, but what we all agree is that the recipe for success geologically is there. And we want to be drilling things that move the needle, not just for the share price, but for the lasting and fundamental value of this project, which we believe has the potential to become, a cornerstone linchpin type of an asset in a region, where there's a lot of gold production already, right? So,
right. Okay. So I guess that kind of answers the next question I had lined up for you, which is around, beyond Nika zone, are there other zones with Douay that you believe have potential for resource expansion, or do you just again stick to the plan?
We think we have a lot of zones with resource expansion potential. I think there's a very good long section on our corporate deck. It shows, along the northwest to southeast strike length of the project, looking north, from Douay West to Nika to Porphyry to main zone and 531. You start looking at some of these zones, right? You look at the high grade pockets within those zones. That was something we had always said. This is not just a low grade near surface deposit. It's a function of how it's modeled, of how much you've sort of brought into the resource. And you'd also asked me earlier, I'm kind of going back a little bit, as to continuity, geologic continuity. What are you seeing in holes? I mean, one of the things we did with this Nika zone, we looked at 282X intercept, and we looked at when that was drilled in 2021. We did a resource update in 2022 with Agnico and with SLR as an independent. And we looked at how much did that drilling actually, what did it do to extend the blocks, right? Because it was drilled, 70% of it was within the pit and 30% was outside the pit. And we saw roughly that there was about 125 meter, zone of influence around that hole, that SLR and everyone felt confident that, this was representative, right? And so we have within our resource area, to talk about upside, again, 70% is within the resource area, but this resource is still 75 to 80% of it is inferred, which means you've got gaps in the drilling of between 100 to 200 meters. And when you have those kinds of gaps over a kilometric scale deposit, there's a lot of areas that if you have success, you can start to build ounces quite quickly, right? Nika is just one example. We have some follow-up holes that are designed around, the 531 zone where we had a 28 meter, 8.8 gram intercept. We've got a new, in that long section, you can also see, based on the new structural interpretation, the relogging, all these other things, we're seeing different plunge orientations. Like if you had seen what Maple used to put out, it was this long section that talked about all this potential at depth. It was almost, sort of pre-justifying, let's go drill to the Mohorovicic discontinuity, which is a very geologic term for that boundary between the crust and the mantle, right? And so, I mean, that's basically like drilling to China. And so all these plunge directions were always just big arrows kind of plunging to the southeast. If you look at our current long section, there's different plunge orientations because it's a complex. If it were just as easy as everything was going one way, like a set of dominoes tilted like this, you probably would have had more success in doing some step out testing when you had some reasonable intercepts in 2021. And what did the company instead, what did it do? It went and drilled, to 1,500, 2,000 meters. And this is what I said when our last couple times we had chatted, that there's a lot of low-hanging fruit in this top 500 meters, right? And the logic of understanding not only where you can sketch in, both build ounces in that upper portion that could be amenable to either open pit or, some type of underground sort of mining scenario, leave a crown pillar, et cetera, look at what the total endowment of resource could be, eliminate some of that overburden issue. But what's really important about what we're doing and what we've done is that understanding the geometry, right? The plunges, what's controlling those plunges, that allows you to go to the next step. As we show in that long section, we've got a phase 1, we've got a phase 2, right? So the plan for this year is still the 10,000 meters. We're on time. We're actually under budget. So there's a lot of things coming from that Douay program. We still have the rest of our drilling. We haven't talked at all about Jutel, which we get zero value for. So that's something for maybe another conversation. But what we want to do with the holes that we're drilling now, including these follow-up holes that we're doing at Nika, is vector, right? Which you can't vector with 2 points in three-dimensional space. You need at least 3. And in our case, we're going to have, an up plunge step out on a wedge hole that's 40 meters up plunge. We re-entered another hole. This is how you do things efficiently. You go in where you already have casing. Instead of drilling a brand new hole, we've gone into some other areas where the hole was stopped too short. We've extended it. So we've got a 40 meter up plunge. We've got a 40 meter step out to the west. We're drilling a hole right in between, which is about 150 meters, spacing between 282X and 338. So once we have that, we put the data together, we understand where it's going. And remember, the down plunge direction is open. There's no drill holes there. So, but you don't go in and start testing that, just to take, because the deeper that goes plunges, so it's going to go deeper, which means it's more expensive, right? The holes become more expensive. And so that's what we're really trying to make sure of, is that we know where we want to go. We have a relatively predictable sense of where what's the shape of the ore body, what's it doing before we plan the hole. The hole is the last thing you do because it costs the most money.
Well, let's come back to this kind of geological understanding, and we haven't talked about. In fact, we'll talk about porphyry zones and volcanic clastic units and hydrothermal bretches and all sorts of wonderful things. Orogenic mineralization.
Are your eyes watering yet?
We can go there. We can go there, but not today because I think we're going to run out of time. I think what we should do is focus on the money making, but the value creation bit, and that's really, and you mentioned it already. How do you move the resource expansion, the development strategy? How do you move from 3 million ounces to 5 million ounces? And the big question is, why do you need to do that?
Well, it's a fair question, right? Because if you ask me, from a shareholder, like we trade today, we hit a new record high this morning. Last check, I think we're trading at 9.5. We've been kind of range bound for a while, and the performance has been great. So you start looking at it going, it's based off of, again, I will give credit to the things that we control. So drilling results, fully funded catalysts, articulating those properly, having told the story repeatedly to people who would listen about, what we were doing to build a company properly, and then the result comes out and you start to see appreciation. But we still trade at roughly $6 or $7 US per ounce in terms of enterprise value per ounce, which is still below the peer group, right? So So you start thinking about, why do we want to grow the ounces from 3 to 5 million? Well, I think we have the potential for this. I mentioned this as it's got world-class potential. I mean, world-class potential is something that's thrown around again by arm-waving promoters, right? Because they want everybody to think their project is going to be the next big thing. Well, at 3 million ounces, right? If those 3 million ounces were, let's just say they were economic, if you put a mine plan out, the typical rule of thumb is a 10-year mine plan. That gets you the majority of your paid back, capital, your best return on investment, and what people care about from a cash flow and a net present value standpoint in a DCF is that first 10 years of production. So if you had 3 million economic ounces, you put that into a mine plan, you came up with 300,000 ounces a year. If you look at major companies' production profiles, a producing mine that's got that kind of production profile is a significant asset, right? Now, it stretches credulity that out of the 3 million ounces we currently have, that 75% of which is inferred, that all of that is going to be part of an economic mine plan, right? And so what you want to do is you've seen many companies successfully. I think you have spent time with CEOs of a number of them that know that they've got the potential for their deposits to grow. But what they're trying to do is they're trying to maximize that present value, right? Of if you were to start with an operation. So for us in this 100% ownership case, what is a production profile that moves the needle? Not necessarily for a major producer, but for a junior company like us that's trying to garner re-rate in the market, right? The rule of thumb has always been, let's say it's 100,000 ounces, right? 1 million economic ounces, 100,000 ounces a year production over 10-year mine life would get you there. Do we have enough at the 3 million ounce resource space to see that potentially? But if you can show that grows incrementally from 1 million economic ounces, 1.5 million economic ounces, 2 million economic ounces. If you ask me what I'd prefer, I would prefer to see, let's say, 2 million or 1.5 million ounces that has maybe double the current grade, and put that into a PEA scoping study and drive towards a pre-feasibility, knowing that we've got additional upside, because that's the kind of thing that, as they say, if you build it, they'll come. A lot of companies have got into trouble because they built and overbuilt mills, and then they hope the geology is going to support the capacity that they built the mill at. And then that's why you have a lot of hungry mills out there, because the ore bodies run out and then they're looking for places to feed. In our case, what we would like to do is, there is a psychological threshold. It's just like we showed when we reported. Again, it's convenient that the holes were, the grades came out the way they did, but we had this sort of 1 gram, 2 gram, 3 gram, 5 gram, right? And what kind of thickness and grades do we have over those intervals? Same thing with the ounce count, is that we've got this 3 million ounce in everybody's mind, still trading at $7 an ounce. If you get that up to 4, if you get it up to 5, it starts to, those incremental bumps, it starts to get into world-class territory, especially given the jurisdiction that it's in. And so I think we can do a lot for limited, what's the most expensive part of mining? It's when you go into that construction phase where you've got to raise a lot of equity, you've got to, do debt financing, you've got to do all this stuff. There's a lot of risk with builds, we've seen cost inflation creep, et cetera. We know our business. We've cleaned up our operations at site. We know we're drilling at roughly $300, between $300 and $400. We're coming at the lower end of that right now per meter. So by drilling holes and showing a path and having the engineers help us do engineering studies that show what the ultimate resource is, things like that, I think we do a lot to not only, show the expansion potential of this high upside project, but also try to hone in on what is the nucleus of an economic deposit, right? And I think that gets us to the next stage.
Well, you mentioned the company which perhaps has done not such a good job at setting expectations, and there are many in this sector. And look at Nika Gold recently announced a 2 million ounce project at 2 grams. Market didn't like that. So managing expectations is important here. You've got a 2022 mineral resource estimate. You're looking to update that. You currently got a kind of a pit shell that you've kind of that you've described. Given gold price doing what it's doing, I suspect that's going to help you with cutoff grades and overall tonnage, etc. But how do you go about kind of painting a picture today of what this thing could be? You just talked about it broadly there, but maybe getting into the weeds here and say, well, what does valuable look like day one versus what valuable could look like, down the line. Because I think the big thing that we've noticed in the last like 12 months or so is that companies that can tell a near-term revenue story or near-term getting into production story have done better. And a lot of companies have wanted to do that as a result. They changed their plans. So again, can you sort of talk to your thoughts around all of those points?
Absolutely. And listen, I think it's always helpful to have Mark, you just brought up Newfound. I'll give you another analog, right? So you look at Troilus. They're in Quebec, no Justin. They came out, the Troilus deposit, it's a gift that keeps on giving. It's got copper, it's got gold. It's relatively low grade, it's consistent, and there's a lot of ounces and pounds of copper, ounces of gold and pounds of copper in that system. When they came out with their their development study, it landed like a ton of bricks, right? And the stock was down, and they were looking at, because it turns into
14% IRR doesn't help.
Yeah, it
or was it 17?
doesn't help. And
it wasn't good.
Maybe people recall what happened there is they had actually introduced into that an upside case of what if gold is $3,000, right? And people look at it and say, yeah, right. Well, look at where we are today. I mean, they've announced a proper, debt package. They've got some momentum, and they're looking smart in terms of the upside case that they defined. And so, I think with Douay, right, I think we have some very different elements to that type of deposit, right? I think people have known, even one of our directors, Gerald, worked for Inmet, so was intimately familiar with the Troilus deposit. And so when you look at Douay, dollars for donuts, right, relative to some of these other things, our best analogies are, Malartic, right, Detour, scale, footprint, even the what's happened with those projects in their development. They've gone from open pit to now underground. They've shown in the Abitibi along these major structural breaks that you've got the potential for these systems to continue at depth. And so when we're talking about a resource update, I mean, one of the just thought exercises that I've had, my own team and, our engineers look at is just what would it look like, right? It's not that you can't open pit mine this whole thing, but if we did open pit mine this whole thing, it would be one of the biggest open pit mines in Canada, right? And there's a host of factors, including permitting, I mean, we're in the best jurisdiction, I believe, in Canada to get something permitted. It's a revenue generator. People understand there's lots of consultation, First Nations, et cetera. We don't have to move a town, unlike, what they had to do at Malartic. But you still want to think about what's going to be most efficient. I'm an engineer at heart, so I look at this and say, let's go back as a thought exercise. And just as an example, you've got overburden. That's been the knock on this project in the past. You've got too much overburden to move. Okay, well, let's leave a 50-meter, 100-meter crown pillar, right? And then use the updated parameters and give me your mineral resource inventory of everything that fits below that crown pillar. And does it hold together? What's the ounce count? What's the grade? And what's the geometry of how those blocks actually look? Is that something that could be, as I said, bulk mineable from an underground standpoint? Like we have mines like Casa Berardi, Selby, that are in our area that have dealt with overburden issues before. So I wouldn't rule out the fact that, portions or big portions of this could also be open pitable. But I do think that when we come out with our updated resource, what will move the needle for people? What's been the knock on the company? We do listen to shareholders, right? Because people do come back and they say, I'm having a hard time understanding. You've got this deposit is in multiple pits, and how do they hold together, and what's your strip ratio and all these other things. It has always been the focus of the company, with the partnership with Agnico, was to grow the deposit, right? To show what its ultimate potential is before you start launching into mine plans, et cetera. I think right now we're in a perfect spot where we can start to look at, with this $3,000 plus gold environment. Yeah, sure, we're going to get the benefit of that increase in gold price. But again, costs have gone up. You have to think about how do you efficiently do trade-off studies on, can you truck ore to a mill? Do you put standalone infrastructure there? Can you take advantage of some of the rail infrastructure, some of the capacity that's there in Matagami and some of these other, other areas that are, within a reasonable radius of our project? Do you get the potential for a sweetener with Utel out of the drilling that we're going to do later this year? So we're incorporating all of that. It's not just, we're using the data to guide more drilling, right? Because that would indicate that we're still interested in this as a science project. We're taking that data, not only using it to drive better drill results, things that actually move the needle in terms of ounces and, but it's also with a plan and a vision that ultimately we want to see this, and certainly our largest shareholder, is in the business of producing gold, right, and doing it very well and generating significant amounts of free cash flow and doing so, and thus garnering a premium rating in the market. We don't garner a premium rating. We garner a discount to our peers because of past failures of the company. But that's something that I think we're starting to rectify. And it's early innings, but and certainly past results are no indication of future success. But I do think that something has changed for us in terms of the technical understanding of the deposit. We have some very good people here. This has been a long time coming, and so I think what you see, and I certainly saw when I was out at site last week, you see genuine excitement, right? You see motivated people showing up to work, working on their off hours to come up with these stereo nets and sort of exotic things that it makes me, I'm delighted, right? I'm delighted to see this type of teamwork, camaraderie, and enthusiasm for a project that has been largely forgotten by the market. And that includes enthusiasm not only from the market participants, but also from our partner.
How does Agnico Eagle now look at you?
Well, they're very busy, right? So, I don't think that, one drill hole is not going to change. They've obviously, we spent a year working on a restructuring deal. If they didn't believe in the team, if they didn't believe in us and what we're doing, if they didn't believe in the approach, if they didn't believe in the project fundamentally as a good geologic story, I mean, they wouldn't have spent $25 million on, direct investment in the ground and equity investments into Maple. I think it's validation, and maybe for them, you use the word relief. Maybe it's relief too, that they could say, hey, we put all this effort and time in to supporting, a company that we had fundamental belief in, and the results actually came back and they were meaningful. I've had some conversations with them. I won't speak to, what it means from a broader perspective. Time will tell, but, I think what I respect the most out of a group like Agnico is they've demonstrated that with good geoscience, with a smart sort of risk management approach, they're able to be extremely successful in a very difficult business. And so, I always looked at, had we lost, them as a partner, I think it would have been a crime, right? It would have been an absolute sin because they're there, they're in the region, they're established, they know what success looks like. And so they've got the context and even longer term outlook for the region than we do as a junior company. So it's rewarding to be able to come back to them with something meaningful. And again, going back to the first thing we talked about, these are the first meaningful drill results we've had at Douay in over 2 years, right? So, we could have come out with this program if it were, rushed, if it didn't have the right, thought process that went into it. We did this on our own. It wasn't, somebody else that sort of decided the targets for us. We did it, as a team. It did take the time, but it's rewarding to see that those results have come back. And it gives us, trust me, it's more fun to have the kinds of conversations we're having now than the ones that we had, when we were struggling and trying to come up with solutions over the course of the last year.
Okay, you've got 2025. You'll have a bunch of catalysts, a bunch of deliverables that you're going to demand from the board. You're going to demand from the management team as well. One of them, I presume, is to make sure that Agnico Eagle still got a smile on their face, still at the table, and a potential option there for in terms of some kind of future partnership or at least development, part of the development strategy for Douay.
Yeah, that's right. I mean, we have an ambitious, the $6.3 million budget that we outlined for 2025. It is one of the biggest programs that we've done on the project, even going back to the history of the JV with Agnico. And so, you could also say, well, when you throw that much money, I mean, you've seen the Osisko guys be very successful at drill, baby, drill, and, drill 2 million meters, you find a windfall. We have to be very efficient, again, with our capital allocation. It's still not easy to raise capital. We're just, we're funded fully for this year. So that's a helpful thing that sort of validates the strategy that I had coming into 2024 was, we're not going to start drilling and then, run out of money and then have to tap the market again. Like we are in a position now where you're seeing a bit of life in our market because people also understand, they see our financials that came out last week. We entered the year with $8 million in cash and we brought the costs way down. So, keeping a smile on everyone's face. Obviously, we talked a bit about Agnico, but there are a lot of long suffering shareholders that have, patiently stayed with us. I thank them for that confidence and support. I know it hasn't been easy, but you know, my goal is always, as I said, to build lasting value. It is not just to manage our share price. It's certainly rewarding when I see people, making money off of their investments in the company. But we're trying to do things the right way. I think that's what probably puts a smile on a great operator like Agnico. That probably puts us more of a smile on their face than these little incremental half penny movements in share price. Is seeing people that are really dedicated to responsible development of mineral resources in a region of interest. Their name is on our project because, even at Jutel, we control the Eagle mine, which is the namesake of Agnico Eagle. So there is a focus on how we do things. I think that's been what I would say, if there's one thing that I'm proudest of, it is how we've taken a project and a company that had some very negative perception around it. And, we've gone back to first principles and, I've sort of tried to stave off the negative voices and you saw Rory McIlroy just win his, Grand Slam. I mean, yeah, you have to tune out the noise, right? There's always a field. There's always people that are, and I've got caddies, I've got, people in the tent here that sort of understand what we're trying to do. We count Agnico as one of our strongest supporters. I count them as friends. And so, but I also know that we've got a lot of people in our corner and this success has been a long time coming. So we're not going to rest on this laurel by any means. We have a lot more to do, but it's nice to finally have turned a corner in a good gold price environment with run rate ahead.
Good job so far. Keep doing what you're doing. Nice results recently. Stay in touch.
Absolutely. Thank you so much. And you take care of yourself. Look forward to talking again soon.